Thanks everybody for joining. We'll get started. Give me 1 second. Adjustment. All right. Can everybody hear me okay still?
Yep.
Okay.
Yeah.
Good. All right. Thank you. Okay. So here we go. Again, welcome everyone. We'll go through kind of the market for the week, see what happened, and then we'll get into the individual picks. So what did the Dow do this week? Dow Jones Industrial. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Actually, so this is Monday. Can't count, right? Monday here, Monday, Tuesday, Wednesday, Thursday, Friday. So on Monday, looked like we had a up day, a continuation from the previous Wednesday. So up Monday, pretty decently, kind of shallow day up Tuesday and Wednesday. Had a big pullback on Thursday, and then an up day on yesterday. So that's the Dow. Let's look at what the Nasdaq did. Nasdaq actually had a really good week. Big day up on Monday, continuation on Tuesday and Wednesday, pullback on Thursday, and a good up day on Friday. So we're talking about just for the week on the Nasdaq. Let's see how many percentage points that is. Looking at about 2% for the week. That's pretty good. All right, let's see what the Russell did. So the Russell is look like a continuation from that Wednesday. So it looks like last Wednesday was a low. So the Russell was up first 3 days of the week, down Thursday, up big yesterday, actually. So you should have saw some decent gains for the week if you got small cap stocks. So the reason for going over these indices is to be able to kind of get a feel for what the overall market is doing, because all of the stocks that you own, they typically fall in one of those three buckets. And here's just the S&P 500, biggest 500 companies, in America, kind of tracks as well the same. So it's continuing to go. So those look pretty good. Now let's get into what our plays are. So I'll just look at a few of the big stocks before we get into our individual ones. So like Apple, see what Apple did for the week. So Apple was kind of actually ended the week down. Actually, it was much higher on Monday. So it actually ended the week down. Looked like high of Monday was 150, closed the week at 148. Let's look at Facebook. Actually, Facebook had a good week. It's like 359 to 372. That's actually pretty good. So if you say what's that percentage for the week, looking at 3.84% for the week. That's good. At McDonald's actually down for the week. So McDonald's pulled back. Let's see. Let's look at American Airlines. American Airlines up for the week, and actually off of that Wednesday low, Thursday low, should I say. So it's up pretty good. So if you look at just what it did in this last pullback here from that Wednesday low, It's up 10%. That's a huge move. So I'm not sure if all the airlines, let's compare this with a few other airlines. Yep. Southwest is good. Let's look at Delta. Yeah, so I don't know what happened with the airlines, but they're definitely bouncing here. Let's look at a larger chart on this. So yeah, they broke the downtrend, bounced off support at 37 here for Delta. Let's go back to Southwest. Southwest actually broke through this support area 48, bounced off 46, rallied up to 50. So that's a 10% move there. We say American. Is Spirit publicly traded? Does anybody know? I don't follow Spirit particularly, so I'm not sure if it's a publicly traded company or not. Yeah, bounce off the lows as well for American. Let's see if Spirit is spelled this morning. Yep, Spirit Airlines. Yep. So looks like most of these airlines hit this low. Let's chart this up real quick. So for let me see who else on. So Troy, you're probably the only new guy here. So what we do is we go through support and resistance, and so I'll just go through it. So I'm just draw the support and resistance on here. So I'm looking for peaks and valleys in this chart. So look for big up moves and then reversals and down moves. So let's just go ahead and do these. So that's a peak. It's a peak right here. Corresponds to that same peak there. Here's a peak right here. Here's a peak right here. All right, now let's just do the opposite, do the valleys. Got valleys right here. Got valleys right here. Got valleys here on this vertical. So I'll draw this one here. So it's pretty much support and resistance. Now, where we're currently trading at today is this is the last bar. We're on a daily chart here. And so this is show that we're at, we broke through support of 2586, 2589, should I say. And so you see bounced off support. That's that Wednesday low that most all these airlines were going through. Spirit actually came a bit below, and actually I could draw this line here based upon this, that low there corresponds to this low right here, right? So got to bounce off the 2277, and now we're back up. So what I would look for is a close. If you can close above that 2589, that's a good sign. Then you may be off to the races up to 33. All right. So let's look at our stocks. Let me see who's on again. Let's go through these. Andre, how you doing? Let's look at your Fubo. All right. Andre has Fubo. Let's go to Fubo. Andre, are you at a place you can talk? Because I can't hear you.
Hey, man.
What's up, bro? Hey, tell me about this chart, man. This Fubo. What is it doing?
That's one. It had support. Let's see. Oh, I can't move the mouse, can I?
Oh, I can move it. Tell me where you want me to go.
Can't really see it.
Oh, it's two. Is it too small?
Yeah, cause I don't have my glasses with me.
Oh, okay. I read it.
I can't really see it, man.
Okay.
I left my glasses.
Oh no, you're all right. So it looks like right here, Fubo hit a high on August 11 of 33. Got a big pull back down to the 25 level, but it bounced off of there on the 20th, went back up, got as high as 28 and some change, and pulled back Wednesday and Thursday, and then had a update yesterday. So, but this, I tell anybody, if Fubo gets below 25, buy it. It's a good buy at 25, and you can see it respected this 25 area. And you got, so if I show a couple times that it got back down there and bounced, you can just see these peaks here. Got there again, bounced. Got here again and bounced.
So we're at 25.
Yep. So 25 is solid. And you can sell at this 28, make that whatever that is. What is that percentage? 25 to 28 is about 2.5. So is that
yeah, because I put another grand into the account, so I probably just buy it at 25.
Okay, just put another order to buy in at 25. Are you
Okay.
Do you want to trade it though there, or now if you just up for a trade, if it gets back up to 28, sell it, and then if it gets back down to 25, buy it again, and just keep trading that until you get a decisive close above this 28, and it starts a new range. But as long as it stays in this box right here, and you can see it, as long as it stays in this box, trade the heck out of this thing. From
Okay, all right.
25 to 28, 25 to 28. Rinse and repeat.
Okay.
Yep. Okay, so that's Fubo. All right. So in your fictitious portfolio, you got another 2,500 to play with. So do you want to add more of Fubo, or what do you want to do, or just keep what you got in the sample portfolio?
Let me keep what I got. So when I get my glasses, I can look, and then next week I'll buy something else.
Okay.
Because I can't really see.
All right, no worries. All right, we'll get to it. All right, let's see who's next on here. We got Milton, Ken. Let's see what your stock is, Ken. Ken, you got PepsiCo. Let's take a look at it. So PepsiCo. All right. If I can type this more. Tell me about this chart, Ken. This PepsiCo chart.
Okay. Let's see. See the day. Over Monday. It was.
Say it again. You're a little bit low.
I was trying to see which day we were looking at the bottom.
Oh,
Which
okay.
day is
Yeah, so
Monday.
Yeah, so Monday was here. So
Okay.
no, right here actually. This is Monday. 23rd was Monday, I think. Yeah, I think 23rd was.
So it looks like right now, for the most part, it's down.
Yeah.
It's going straight down.
Yeah, it's a little pullback. I mean, if you look at the short term, but the longer term trend, it's still up, big time off of this March 21st. Now, one thing is that it did hit the support of this 158 and pull back. You got some support here at this 153. I would be looking at that 153 to see if the stock can continue to hold there. If it breaks below there, this 147 might be in play again. So just kind of given where you are and in your trading portfolio, do you want to buy some more, buy, sell, or hold PepsiCo?
I'm going to hold until it
Okay.
absolutely.
All right. And any other commentary you want to give on this?
Nope.
All right. So let's see what else we have. I think Milton. Let's talk about that PLTR. All right. So talk to me about this, Milton.
Good morning, everyone.
How you doing?
Okay, this stock got a little interesting. I got greedy. It was going up, and then I pulled the trigger on more before it really broke out.
Okay.
So that's you should never go early when you're a trader.
Okay.
But I did.
All right.
The end result is I broke even. Well, actually, I made money, but I'm going to say for this, I'm going to say I broke even because of what it did the last 2 days.
Okay.
If
So
you
when
look at,
I'm sorry,
okay,
go ahead.
sorry.
No, keep going.
Oh, okay. If you look at Monday and Tuesday,
Mm-hmm.
that Tuesday is when I bought.
Okay.
And of course, it's the highest part of Tuesday because I'm on my way.
Okay.
And then some bad news came out and
Mhm.
it went down.
Yes.
Now, what I should have did is when the bad news came down, I should have bought down there at the bottom there.
Mm-hmm.
Because one, it was a support, and two, the news was silly.
Okay.
And when you see those two combinations, that's almost guaranteed that your stock is going to go up.
Okay. Got it. Yeah, that's yeah, it definitely bounced off that 24 and went right back up, Thursday and Friday. And it had the benefit of the market being up. So like we talked about earlier, the IW with the Russell. So this is a small cap, I believe it's a small cap stock or a medium cap stock. It went up. The NASDAQ was up as well. So it's a tech stock is so tech and probably medium cap. And so yeah, though that bode well. And so the bad news corresponded with 2 good up days, Thursday and Friday. And so all of that kind of reversed and you can see it here in the stock. So in terms of what you got in the portfolio here, you got about, looks like probably about $3,400 left. What do you want to buy, sell, or hold your PLTR? And in terms of your fictitious portfolio.
Okay, I'm going to add 25 more shares.
Okay.
So it'll mirror a little bit more of real life.
Got it. I'll put that in. 25 more. Okay. Cool. Thanks, Milt. Let's see what else we got here. What's up next? Troy, I'll come back to you. David, what you got, man?
What you want to know?
Let's see what your stock is, brother. Roblox. Let's see what's happening with this Roblox. All right. Talk to me about this chart here.
I'm in the green.
What's your entry on this?
What we got in at $83 or something?
I don't even remember. Let me see. What's your entry? Yeah, 83.64. All right, you got about half of your funds left, but let's talk the chart first, and then we'll talk about the shares. So, what is this chart showing you?
That is having a hard time getting over 85 because it's a resistance.
Mm-hmm.
But once it does, it'll go closer to 93, and then we're gonna be off to the races. So it's a good stock that I bought, and I got in a good entry, and it's gonna make me some money.
Okay. All right. Yeah, looks like uptrend definitely from off this 19 lows. So given that you got let's see what your position. You got about 2,500 left. What do you want to do? You want to buy, sell, or hold Roblox?
Oh, we can keep holding it. Ain't no big deal.
Okay. Anything else? You got 2,500 left. Anything you want to buy else with that 2,500? You're just gonna stay pat with that.
I'm straight.
Okay. Cool. All right. Let's see what we got next. Thanks, David. Vanessa, you got a couple stocks in here. You got NVIDIA, and then what's the other one? FO, the water company. So the water ETF. So let's look at your water ETF, FO. All right. Water ETF. And this thing is rocking. It's a crazy good chart right here. I need to just go ahead and put an order in and buy some of this myself. like for real.
It's a slow creeper.
Hey, it is, but it's doing its thing. So even if I take this point here on the bottom of this long green candle, and then this bottom here on this pullback, and just draw that slope and keep the slope the same, my computer would act right. All right, there we go. Take those, and so if it just could continue on that trend there, as trend is your friend. As long as don't break the trend, it's good. This thing is continue to go higher. I'm sorry, I guess I ain't let you get no commentary on it.
No, that's fine. I mean, the only thing I said is a slow creeper. So it's just one of those things. I'm just gonna sit there and just let it go as long as it can.
Okay. Let's see something here. Yeah, we have no history in terms of nothing to the left of the chart where we can see anything higher. So you're at really uncharted waters in terms of at this support area at this 58. So we just got to kind of wait and see. We may talk a little bit about what do you do in situations like this when you don't have anything on the left to compare it to. There's one tool that we can use to kind of give us some context, but we'll come back to that one. Let's go to your NVIDIA. All right. Let's see. Talk to me about this NVIDIA chart. What do you see?
Okay, it had a really good week. It broke through its resistance, and so I'm like, okay, that's good. So I'm just kind of interested to see what that one's going to.
Okay. All right. Yeah, it looks like both of those stocks are at all-time highs. Didn't have anything else on the chart to compare it to the left. So let's see. So one thing so when you have situations like this, you just got to kind of watch it and see. One thing that sometimes trader will use is what is called a Fibonacci retracement. So if you you can take this low, but I'll go with this last pullback here at this 78. So if you just take this and use this tool and move it up. So that's like what they call a 100% retracement off of the prior low. So if you measure that and then we say, okay, so if that's 100% retracement, let me pull it down a little bit. Sorry. That's 100% retracement. You measure this, we say, okay, how many points is that? So from the bottom to the top, you're talking 28%. So if you could say a 28% run from here higher, what would that be? So you just measure and go up. So say about 28%. You're right here at that 291. Yep. And I guess we drew that before. Was it here? We must have did something before we had this 290. But yes, so that 291 is like the next area that you can look at. And I don't know, I must have done it before because I got a support point there.
Okay.
Yeah. So, that's something that you can use to sometimes help out when you don't have anything on the left hand of the left part of the chart to kind of see where you go. And it gives you some context in case if you pull back. So you do have this support area here, but if it gets further extended higher and doesn't have anything, you can kind of use this tool. And it's just this. So if you go down to the third icon here, if it's not visible, you can pull out this little, it's a little tick on each one of those. You can pull it out and it's called fib retracement and you can use it. Yep.
Okay, thank you.
Yes, ma'am. All right. So you're just going to continue to hold those, I assume. Both of those. Is that correct?
Yes.
All right. Thank you. All right. Walt, what's up, man? You finished with that breakfast, bro? Walt, you there? He was looking at Amazon. I know he wanted to switch, but I'm not sure if he gave me another stock. So once he gets back on, he'll let me know. But we'll just go with it as well. So it looks like Amazon got up here to a peak. So we'll draw this resistance at this 37.44. Had a huge pullback off of earnings. So if you see here, Amazon got smacked down pretty hard from. So it was down about 15%. So it bounced in this general area. So if I come out, it's like you can use this little point, this point here. So if I draw horizontal here, so you got a good bounce here at this 31.70. And now we're back up to 33.49. So, and if you say where we are in terms of that retracement, we can do the same thing from the peak. Kind of the peak to the valley, That's 100% retracement there. On these retracements, a lot of times they'll use 37.8, 50, and 61.8. So anywhere in between these three spots, we might see some resistance, but we do know we have some resistance here of a previous line right at this 50. But just in terms of this, that pullback from the highs to the lows. So these two areas may come into play as well. All right. So Troy, thank you last one. So I think you said Delta, no, American. Let's go to American. Kind of talked about it a little bit with the let's see. All right. So Troy, we started charting this a little bit already. So again, if we go through this process of using peaks and valleys,
Right.
So, yeah. So the way I kind of, let me just draw it like this. So if you say this is a peak area, that's a peak area. I guess technically we could draw this area as valleys. It's kind of a descending valley. And you can see some of them we've actually have in there already. So
It looked like it peaked out sometime in July.
yes, sir. July. Yep. It's a little peak right here as well. So if we wanted to draw that peak here as a horizontal line, so what we could do, since we have a horizontal line here already, we can maybe adjust this one down a little bit. So let me change my drawing tool and draw this one down. So I can say, yeah, that's that peak there. So if you're good with that one, we'll draw these. These two are close enough. We'll just draw a horizontal line there. And so given that this is kind of where we are in the range. So do you read charts? Are you familiar with charts, Troy, or is it new to you?
No, it's not new to me. No.
Okay. All right. So tell me about this chart then. What do you say?
Well, the way I see it, like I say, it peaked out in July. Probably most people doing most of their traveling in the summer.
Yes, sir.
And now the season is changing, so it's dropping. Maybe it picked back up. Probably, I'm thinking around close to the holidays.
Okay.
That's what I'm thinking.
Yes, sir. So let's go to your portfolio. So like I say, everybody has a fictitious portfolio. You can buy anywhere up to $5,000 worth of stock, and we can start tracking this in terms of performance. So how many shares of this American do you want to buy? of the 5,000. So we took 5,000. Looks like it's currently trading at what is that, 2022. So you can buy up to 247 shares for the whole 5,000. Half of that will be about 123. So you can tell me how many shares you want me to put in for you. If you're talking, Troy, you're on mute. I can't hear you.
Okay, you asked me how many shares I'm gonna put in.
Yes, sir. How many shares do you want to buy? Because what we do, we have a $5,000 fictitious portfolio, and what we do is, so since the market is closed today, each person, so you say, hey, I want to track American Airlines as my stock that I want to follow and look at the performance. And the reason for it is just like you gave some analysis here to, you know, this chart. So week after week, we can say, okay, hey, we can measure your performance. So for instance, let's use Walt, right? So not use Walt, let's use Brenda. So she has this Facebook, she bought in at 358. It's up to 372. So she's up like $98. And that represents like a 3%.
Honestly, I don't know how much I'm going to buy right now. To be honest with you.
Okay. Well, I mean, this is just paper trading anyway. So it's not like you're wedded to it. And so if you want that one, the only reason why I'm asking is so we can start tracking the performance. Now, if you don't like American Airlines, you have a better stock that you say, hey, I know how many shares I would like to buy that based upon this trial portfolio, you know, then we can switch this out for another stock if there's something else you're interested in. And just as a so typically some people will buy, you know, maybe $1,000 worth, $2,500 worth. So, you know, it's up to you. And if you say, hey, I still don't know, give me a week or so and we'll come back and revisit it next week. So you just tell me. All right, well, we'll just come back on it. We'll see later. Let's see. Mike Purder, how you doing, man? No, it's your first time through, Mike. I don't know if you watched any of those videos that I sent out before. And to everybody else, let me open it up. So we record these meetings for the benefit of people. If they don't have the opportunity to join us live, they can always catch up. So let me give you all the link to the videos so you can see. So I put in last week's videos as well. So, and I'll put the link in the chat here in the Zoom, so you all can see them. Yeah. All right. So here's the stop this. I didn't want it to play. I was just trying to bring up the playlist. Let me go back. So this is the playlist here. I'll put the link in the description. And you can catch up on previous meetings if you miss one. I try to put them in by date so you can see them. So you can see I have the August 21st and August 14th for our previous 2-1 meetings. Some of these other ones are based upon topic. So if you're new, so like Purder, I know it's your first time joining. I would say definitely look at the support and resistance, understanding candlesticks, and then trading view setup trading view. So let me put this link in here. And so I'm gonna try to be a little bit more consistent in terms of putting all of the chat. All of the videos in that we record them. And, you know, you can come back here and watch them at your leisure, just in case if you didn't get a chance to join, you have to catch up later. All right. So let's see. So Mike, what we do is we use our charts in terms of support and resistance is kind of what we teach here. These are candlesticks. This is just a site called TradingView that we use to chart. And then in each of these, each participant, we have a fictitious account of $100,000. So everybody gets, so if I take, 20 people or so, everybody gets $5,000. And we can just track this. And so if you have a particular stock that you're interested in, we can actually put your name down, give you a stock, and then we can start tracking that week to week. If so, we can put an order in, and for the and that will fill on Monday for the number of shares out of that 5,000 that you would want to use, and then we can start tracking the performance. So, is there a stock that you like, Mike, that you want to follow, just as yours? If not, I can pick one for you just to get you started.
Yeah, can you hear me now?
Yes, sir, I can.
Okay, I had a little technical difficulty.
No,
yeah,
you're good, man.
Yeah. You just pick one for me.
Pick one for you. Okay. All right. Let's see, Mike. All right. Super. I know I butchered your name there. Let's see. Let's do let me look back through my watch list. Let me see what's good. I'll get something that I follow, so I'll keep an eye on it. Actually, let's do Chewy. Chewy is a pet food.
Pet food.
Oh yeah, okay. You hip to Chewy? Yeah.
Yeah, I got dogs.
Oh, that's right. Okay, hey, that was a good pick then. Let's say we'll do half of that. So you say what is half of 5,000 at 88? It's at 88. 11. So 56. So we do about 23 shares of that. Probably 27. It's about half. Yep, a little bit less than half. That's 28. There we go. So I'll put this order in for this one on this Chewy. So you and Milton will go in this week. I need to update this for these last few ones for Sam, Angie, Brenda, Kyle, and Troy. They bought some Curtis, I'm sorry. They bought some, and so I'll add these from last week's. I just hadn't updated these yet. But while we're here, let's look at this. Let me see if I missed anybody else before we go on. Walt, Vanessa, Milt, Mike. Okay, we're good there. All right. So let's just look at the performance of our stock here. So Walt didn't have any shares there. So if we just say, hey, who's doing what? So Siri Kamal, she's down about on her stock CHPT. She's down about $118. Brenda's up 98 on Fubo. I'm sorry, Facebook. Julia's up 177 on Google. Christian is down 234 on Hood, which is Robinhood. Sharif is down on Magnite. Kyle is down on NIO. Vanessa's up. Look like Vanessa's winning, actually. Vanessa's up $600 on NVIDIA. Milton is up $290 on PLTR. Curtis is down on, I think this is Solar Edge. Barry is up a little bit with Tesla. Lorenzo's down a little bit with, what's that? Wingstop. ATVI. I'm not sure what that stock is. Brenda's up a little bit there. Vanessa's up a little bit on her foe. Andre, when we put this in, it's tracking at this 28, but I know you own this one for real at 25. You know what? I'll adjust this to the 25 to make this closer to what you really got on there.
Okay.
All right. So that's like you up 178. Ken on Fubo, he's down 33. Mario on that Neighbors is oil up to 36 to 67, and then the rest of these I'll put in. So can't really count these yet because they don't have any shares in. So I'll add these in to see what they feel that this week. So that's the performance there. So put the link to the playlist in the Zoom chat so you all can watch those. Perter, definitely go back and watch those 3 that I was telling you about, as well as Troy. Watch Understanding Candlesticks, Support and Resistance, as well as Trading View Setup. And you can watch the other ones as well, but I would definitely say watch those 3. Okay.
All right.
Okay.
Yes, sir. Yes, sir. Let's see. Cool. All right. So didn't have anything specific to cover else today. If there are stocks that we want to look at, something that you may have been following, questions about, any question is a good question. So fire away if anybody has any questions.
Hey, Mike, got a quick. So you every Saturday around 10?
Yes, sir. Every Saturday at 10.
Yeah, I
Yep.
just happened walking past my phone and I just saw you text and stuff. I'm like, okay, I forgot.
Oh, yeah. I try to send it out. Sometimes I'm
Yeah.
late and send it out.
Yeah.
But yeah, typically we're every Saturday morning at 10. Yes, sir.
Okay, I got it.
Yep.
Thanks.
Hey, get your boy Trail on. I'm trying to get that Joker to come on. Sam
Oh,
was on.
good.
Sam was on last week, but that joke ain't on this morning. Clowny.
Okay.
Right.
them your classmate, your
Hey,
homeboy.
hey man, them cats, they ain't consistent.
Yep.
But yeah, any other questions? Anybody else?
Hey, Mike,
Yes, sir.
have you looked at any stock that's going to be, since they pulled out of Afghanistan, that we could pick up? Any companies that you think it might drop and come back?
I really haven't been playing the Afghanistan news, trying to find a correlation for a stock there. So I'll open it up to the group. What stocks do you think that will benefit from possibly, even if you can't identify a particular stock? What do you think about in terms of maybe an industry that should benefit from this Afghanistan stuff?
Probably with security, like I just checked Blackwater, so they're probably traded. So
Okay.
I was gonna get through and see, can I find some of those security contracts to see if any of them publicly traded?
Okay. Yeah. Let's check a Raytheon. If I can spell Raytheon. Yeah. So I know Raytheon's in the defense area. Don't know how much exposure they would have from a weapons and defense perspective. I don't know many of the government contractors. Let's see a Northrop Grumman. Let's see what they do. I think they make some weapons and stuff. Let's just chart this up real quick. Let's see what they're looking like. Again, so Troy, as you see, you know what? Let me back that up. Let me do this. So again, we just do didn't mean to do that. So Northrop Grumman. All right. So if let me just delete these. So we just gonna. So typically, so it's for Mike and Troy's benefit. Again, so what I do is if you just look at peaks. So if you draw this kind of as peaks, so I'm just looking at the peaks here. So when you're first trying to get used to charting these out, just so if you take this fourth icon, it's the brush. If it doesn't show, you can click out here on your piece here. So you just go to the brush, and on that brush, what it does, it gives you the ability just to draw your points in. So I'm just looking for peaks. So what you can do is, as you see these, you can draw them individually, and this just helps to get your eyes kind of trained to this. But once you do, then you can just kind of see them horizontally and just draw them that way. But getting started, I think Sharif, we were going through one time and we tried it this way, and he said it was helpful. So just kind of try to show that as a means, right? So if you look here, I think I got most all of the bottoms per se. So now some of these are going to be really close together. So, and so like here, you say this one, this one, this one, and then these two, they're so close together. I might just draw one horizontal line to kind of connect them, if you will, right? So once I draw all my peaks and my valleys, then I just go through, use my cursor to move it to the point where I want it to go. Then I hit the Alt H key, hold down the Alt key, hit H as in Henry, and that'll draw my horizontal lines. And that's how we draw the support and resistance there. So usually, like if we're just drawing these and we're talking about them, I don't trace them out this way. I just kind of go to the peaks and see if I see something horizontally there, and I'll draw. But for the benefit when you're first starting out, I would definitely say do that. And actually another suggestion I would say, go to tradingview.com. It's a free account. You can set it up. I'm using a free account. It's not costing me anything. Once you go there, so like I'll go to the front screen. So once you log in, you're going to come to this screen here. What you want to do is after you logged in and created your account, you just want to go to chart. When you click on chart, it's going to take you to the screen here. All right. Once it takes you to the screen, if you don't have this watch list set up on the right, just click over here on the far right. There's a toolbar on the far right, like there is on the left. Left is really most of your drawing tools. On the right is information stuff. So the first one is watch list. That's the one I pretty much use all the time. Some of they got some other stuff here I really don't use. And maybe if somebody finds some usefulness in this, let me know and maybe we can incorporate it in. But I just go to these watch lists. And so then you can edit a watch list. So when you get back, so let's just say, let me just take a stock. I don't know. Let me make up some. All right. So take Hyatt Hotels, right? And as long as you're in this middle area, if you just type anything on the keyboard, it's going to bring up this symbol search. If you don't know a stock that you're looking for, just type the name. So you can just say Hyatt, right? So I just typed out the first few letters. It'll tell me what the symbol is, what the description, to make sure that's the one I'm looking for. And then you want to always move your eyes to the far right to make sure that you're looking at the right exchange. So you're going to want NYSE, NASDAQ, or I think the third one is maybe AMX. And look for the US symbol here in terms of the little thing. Because if not, if I check one of these other, I think this is like the SWB. I don't know what stock exchange is, but these are other stock exchanges around the world. All right. And so if I click on that, that'll bring up this Hyatt Hotel, right? So now I got the chart. If it doesn't show these green and reds, you want to go up here to, so you'll see here, this is a symbol, this is a time frame. And then if you're not seeing these candles here, click in this little area, because if it's bars like that, you'll see these funky looking bars. But if you click there and go to candles, that should show your candlesticks, right? And there's a video on understanding candlesticks to kind of figure out what they are. But once you kind of draw that, then you can say, okay, now I got it up. And let's say this stock here, if I right mouse click, it's going to bring up a little drop down box. If I wanted to add this to my watch list, I'll say add H to watch list. And if I only have one watch list, it'll just put it there. So I'm going to add it. All right. And then you see it added it down here. So this is what I just added. So Hyatt Hotels. Now I have different sections within my watch list. So this is like my crypto area for cryptocurrencies. I have sectors for the different broader sectors of within stocks. I have a couple of dividend stocks. I got an electric vehicle. Then I have the indices. This is where I keep the Dow, the NASDAQ, the S&P, that stuff. And then these are the stocks, right? And so then I have another category. I think I was tracking some Deloitte stuff. So it didn't put it in my right section. So all you have to do is just grab this, slide it up. And if you just hold it, it'll get to. So I know this is my stock area. I can drop it anywhere in there, just drag and drop. And once I drag and drop it there, you can see that it's not in alphabetical order. But if I go back up to symbol, click once, click twice. Now it's in alphabetical order. Now if I go down to the H's, go up to, oh, it's in reverse order. You can see here it's in the H area. So that's a high. Now, if I go ahead and then just start drawing my support and resistance, it's gonna stay on here. So if I ever go back to this chart again, so let's just draw these really quick, looking for my peaks and my valleys on here. Same concept. I'm just not tracing out the peaks and the valleys. I'm just kind of eyeballing it. Take those right there. That's good enough for government work. So you can see here, and you can use your, if you have a scroll bar on your mouse, you can just, you know, use your scroll bar and it pulls it in and pulls it out. So you can zoom in and zoom out. All right. So now let's say if I went to another stock in my watch list, click on it. If I go back to that H for the Hyatt, it'll bring back what I previously charted there. Okay. So quick run through. While we're here, we'll just talk about this for the new guys. On your right-hand axis here, these are your prices. So where it's 92, 75, 74. So it's just a price on the x-axis. On the y-axis is time. So this is show April, June, August, you know, so it's based out look like by quarter. If I zoom in more, you can see now I can see August. And then I have this this cursor. As long as I have this selected here as a cross, what it'll show the crosshairs, and you can see the crosshairs, they go horizontally and vertically all the way. And so if you go to the far right, as I move this, you'll see that black to the far right here. That's going to always show me where the price is in reference to where my cursor is. So I can see here that's $80.86. But then if you allow your eyes to fall straight down, you'll see this vertical line and you'll see this black box at the bottom. That black box is going to trace the time or the day that I'm on, the time frame. And speaking of time frames, here I can choose different time frames. So I'm on a daily chart. So one candlestick represents one day. If I want to go to a weekly chart, one candlestick represents 1 week. If I want to go to a monthly chart, you know, so on and so forth. If I want to go deeper in, I can go to a 15-minute chart where each candlestick represents 15 minutes. So most of the time when we're looking at the charts, we're probably 80% of the times we're on the daily chart. So I'm gonna be talking about in reference to days. Sometimes I may switch out to weekly if I want to get a larger context, if I'm trying to see if there's, you know, something else on the chart to the left that I want to see from a historical perspective. But most often than not, I'm on the daily chart. So I know it's a quick run through. I usually get these videos up probably within a week or so. So you can just come back to this if you need to refer to it. But again, if you watch that one in here on setup trading view and then understanding candlesticks, you'll kind of get what I just talked about. And just a review in terms of support resistance, and it's not much more than what we showed so far. But if you need a refresher, you can go back and watch it there as well. So hopefully that helps, guys. Any
Quick
other?
question, Mike.
Yes,
Yeah,
sir.
what would be the benefit of looking every 15 minutes?
If you're an intraday trader and you're trading on, so take for instance, let's look at NVIDIA. It had a good week, right? So let's say that I'm trading NVIDIA, right? So there's a 15-minute chart. Let me get rid of this. So there's a 15-minute chart, and if I want to take an entry, so just like I drew support and resistance on that daily chart, didn't mean to do that. I can also do support and resistance on a 15-minute chart, right? Sorry, I keep hitting the wrong button. So let me move that up a little bit. All right, so I can say support and resistance here. So if I'm trading on a day, I can say, hey, on August 26th, it went up, came back down on the 25th, and we really hit a bottom, if I want to be technically correct. That's the bottom part here. But I want to correspond it to this peak here. and then this valley here, right? So I can say, hey, it went up there before it pulled back, got up here, it broke through that resistance, got a high there, and then it's a pullback. If I say, hey, I want to use this pullback area as an entry, then I can trade on this 15-minute chart where I can create an entry here and just trade that. You have people that just trade, you heard of day traders that they trade in a day. They'll open a position, or they may open several positions and close them out in a single day. Now, for most people's account, you have to have at least $25,000 in the account in order to do what they call 3 in and out trades within a 5-day window. If you want to do like a 4th trade within a 5-day window, your broker probably will flag you and say you can't go in and out that fast. You have to have at least $25,000 in your account, and it's called pattern day trader rule. But I hope that answers the question. All right. Any others? Any other questions? So just looking in terms of our performance, how do you all think you're doing? I mean, the numbers are what they are. What's the feedback on what you all are seeing based upon the techniques that we have been going over, and now you get to apply them to stocks? How do you think this process is going? Everybody don't answer at once. If you're on mute, I can't hear you. Looks like everybody's on mute. Need somebody come off mute and talk to me.
Yeah, it's going pretty good.
All right. So let me ask you this. Are you all using... Okay, I'm sorry. Keep going, Ken. Sorry about that.
No, I was just saying as good to be, expect. You mean with the fictitious accounts?
Yes. And the only reason, and the purpose of the fictitious account is just to get something that you can look at and start applying these techniques. So when we go through this stuff, what I really want you all to do is take these stocks that you're tracking. And so one of it is why I call on you to say, hey, tell me what your chart is doing. I want to see if you are able to read the chart, make decisions about what you see on the chart. Because really what I want you to do is take the same information, apply it to what you're holding in your actual portfolio, and start putting it to work in terms of the techniques. Because I can sit here and go through this stuff each week, and if all you're doing is just head nodding saying, yeah, Mike, we agree with you, but you don't put in this, to work on your own stocks that you have in your portfolio, then it's just a educational exercise. I need you all to put this into play, not only in this fictitious portfolio, but I really want you to apply it to stocks that you actually own, and use this information to make decisions. If you're a long-term trader, or if you're a short-term trader, or if you're somewhere in between. So that's really the purpose of it. And what this does here, it just gives us something to look at. And I can. So when I call you, so we'll just take yours, Ken, I hope you don't feel I'm picking on you, but I'm gonna just use you as an example. So let's go back to this PepsiCo. So you kind of gave me the commentary here today. You're like, hey, it's kind of going back down. But I want to see, number one, as you read this chart, you tell me what are you seeing and what do you want to do? So when I ask each of you kind of like, hey, in terms of your positions, do you want to buy, sell, or hold? I want you to be able to make decisions around based upon what you see on the chart, what is doing in the context of the broader market, where it is in terms of its support and resistance, what is it doing as it relates to its trend lines, what decision does all of that, when you put all of that into the analysis, coming out on the back end, do you buy, do you sell, do you hold? And do you have justification for doing so, versus if you just look at a chart and it looks like this, it has nothing on it, what does this tell you? Versus if you go in and you put this stuff in it, does it give you context to be able to make a decision about what you should do with that particular stock? And then another thing is, if these stocks are not stocks that I want you to choose stuff that you really follow, because in particular, if you own something, put something in here that you own, because one of the things that I feel, if you own something, you're going to keep a closer eye on it versus if you're just looking at it from a, paper trading perspective. And the last thing I will say to that is, for those of you, so we have, I don't know, 20 people in the group or so. You all come with a variety of different perspectives. So I'll give you one specifically. This is what Vanessa brought to the table. She talked about this water company. I had never heard of this thing before, but just by being in this group, we're sharing ideas and stuff with one another. I've added this to my portfolio, and I'm probably gonna buy some of this in my real portfolio because she brought it to me. The chart looks good. I like what it's doing. She's providing analysis on what's happening with it. And I say, okay, I concur. Looking back at this thing, if it gets to 51 or, 51.60, it's a buy. If it ever gets back down to 46, it's a strong buy, right? But it might not ever come back because this thing is just trending up and to the right. But had she not introduced the stock to us, I probably would have never found this stock because I don't look for water plays. I follow a lot of tech stuff. But hey, this thing is, you can find a chart like this, buy here at 46. So let's just look at that. Let's just say if you were fortunate enough to catch it here. So those of you that been, in the group for a while, what does these three circles represent here? What pattern is this? There's a name for it.
The triple bottom.
Absolutely. You see a triple bottom, you see this on the chart, and you've had some history with a chart. You see that? That's a buy, guys. Buy that thing, all day long, twice on Sunday. Buy it. But look, if you would have bought there to where you are, that's a 26% profit, right? Let me show you all something that makes sense in the context of what these percentages mean. There's a chart I have. Let's see if I can find it. Give me 1 second, put my hand on it. It's one of my crypto charts I just gotta put. Can't find stuff. Need it. This crap is not in order. 1 second. Wow, why I find it. Yeah. Let's see. Okay. So this is a chart here that shows I'm trying to find. Hold on 1 second, guys. Give me 1 second. Troy's calling me. Let me go on mute real quick. All right, sorry about that. Trying to find this. Okay, here and that's not it. Yeah, I can't find the one that I'm really looking for. Let's see. Give me 1 second. I'm sorry. Fumbling through. I can't find the chart. But what it is really the law of large numbers. So when we talk about these stocks, what you want is to be able to get to what we call law of large numbers. I'm trying to find it. I can't seem to find it. But what it comes down to is that, and we spoke about it before. I mean, I'll just pull up any spreadsheet and just do it. So what happens is there's a rule called the rule of 72, right? And the rule of 72 basically says you can take so I just put it in here. So, rule of 72. I can type. All right, rule of 72 basically say you take the interest rate that you are going to earn on a particular interest rate of return. All right, and if you divide that by 72, what that's going to tell you is that'll tell you how long it takes your money to double. So if you take a 10% interest rate, if you were to take, so we just do 10 over 72, right? I did it wrong. Actually, it's backwards. It's 72 divided by the interest rate. Sorry about that. Right. So 72, but divided by the interest rate, that'll tell you how long it takes for your money to double. All right. And if I can't spell this morning. All right. So if you took that and you said 72 divided by 10, all right, 10%, and put the decimal place there. Yeah, the decimal's not right, but what it'll do is it'll take 7.2 years for your money to double, is what this comes out to be. All right, so it means every 10% that you earn per year compound interest, that means that in 7 years, your money's gonna double. So if you go, and so what I mean double, let's say you start with $100. So you go 7 years later, that's 200. 7 years later, that's 400. 7 years later, that's 800. 7 years later, that's 1600, right? So you say, and that's just a 10% rate of return that you put in here. So we say 10%. Let's change this. All right. So it's 10% on there. So it's going to take 7 years for your money to double, right? That may not sound like a lot, but two things here. So we did 1, 2, 3, 4, 5, right? So that's the number of years. I mean, that's the number of doubles. So 1 double, 2, 3, 4, 5. So if you take that times 7 years, that's going to be, 35 years right there, right? What happens is this is just $100, but look at when you change this and add a 0 to each of these numbers. Say you started with $1,000, you turn $1,000 into $16,000 over 35 years, right? But what happens is as you continue to get doubles, as this number gets larger, then this is how wealth is created, because compound interest and the rate of return that you have. So if you go 1,000, that's 2,000. And actually I want to change this to where to compute it automatically. So anyway, you get the point. And so, but if you can, if you take 7.2 years here on a 10% interest return, if you can earn 14% interest per year, that 14% interest is 72 divided by 10. I'm sorry, by 14. So we'll just say C2 to C1, right? So it's going to take 5.4, and I don't know why I got my decimal off, but it's going to take 5.14 years for your money double. So every 5 years on 15%. So if I go 14%, so I go 14.9, I know it's going to take me a little less than five years to double, right? So you say now every 5 years you go from 100 to 200 to 400 to 800, to 1,600, right? Not 16,000, but 1,600. And so when you get into the law of large numbers, that interest rate means a lot. So where we're looking at, we showed some stocks here that was trending up. So you just look here. So we take, this goes back to March of this year, right? So let's just take this and see where we are. So that's a 27% move in literally 6 months from February to March, right? That's 27%. If you were to average 27% going back to our rate of return, right? So if I change that to 27, all right, that means every 2.6 years, so just rounded it up to 3. But every 2.6 years, your money is going to double if you can average a rate of return of 27 bucks. 27%. Let me slow down. So you want to be in this game where you can earn a consistent interest rate. Anything over 10 to 12% a year. If you do that, you're talking 7 years or less for your money to double. And again, we're just talking $100 here, but just throw zeros. Say you started with 10,000, right? If you go 10,000 and you double that, right? Now that's 20,000. So that 20,000 goes to adding 2 more zeros. Now you're talking 160,000. If that's every 3 years, so 3, 6, 9, 12, 15 years. Now averaging 27% a year is hard. That's probably undoable. But if you were to be so lucky in a 15-year span, you can take 10,000 and turn it into 160,000. So this law of large numbers, what the large numbers mean is that as you get later in these years, these doubles mean a lot more. So if you take, so let's take this E. So I'm doing it on the fly. So that's E1, right? Okay. So if I just double that, right? So if you take each one of these and you just double it, okay? So now it's just really what your percentage rate is. That's going to tell me the number of years that you're going to get to. So that's every 3 years, right? So it's every 3 years is what that is on that 10% interest rate. So it's going to take me every 3 years on that. And let me change this. That's what was wrong because it's a percentage. All right, 2.67 years, right? Just round it up to 3. So if you take the 2.6 here, and let's change that 1 times. So what we're trying to do is just change this out. F2 times 2. All right, so this is the doubling, right? So now, so you're saying, and this is not right. So it should go to, I'm doing it wrong. There we go. So it's not quite right, but you get the point. But so it's every 2, so you go 2, 4, 6, 8, 10. So about, if you take 10 years of that, it's probably going to be about 11 years. So 11 years, you can take $10,000 and grow it to $160,000 based on a 27% interest rate return. But again, if you go something closer to 10, my numbers are not right here on the math, so ignore this. This is going to go, so it's going to be 7. So 7 times 5, about 35 years, right? Is what that's going to end up being. So in 35 years, you can take your money, double it 5 times if you earn 10% a year. Now, So imagine if you have an investment that you start now, or just think about, you encourage your kids to start saving. Say you have grown kids, they just get into the workforce. You tell them to save, 10% of their income a year. And if they can earn 10% on it, when they get, 50, 55, the amount of money that they will have just by using compound interest in their favor, provided they're earning a decent interest rate, you just got time and compound interest working in your favor here. And so that's really, it's probably a long way of explaining this, but this is really what you want to do. And having compound interest and time working, and where the time factor comes in is, if we go back to here, let's look at the S&P. All right, so this is S&P chart, right? So let's go out to a monthly. Okay, it's a monthly chart. So let's go back again. So we're talking 1994, right? So from 94 to where we are today, let me zoom. So from 1994 to where we are today, if you just bought an index fund in the S&P 500 in 94, and you just let that compound interest work for you, you just went from, that's a 1,682%, right? And so, and that's just straight line. That's not even compounding interest. That's just raw numbers. So the compound interest on that is even more. So you said it was at 94, what we're in 2020. So you take 40 years. Is it about 40 years or so? About 37 years, whatever the math is there. If you had that working for your favor, you probably got, so we say, what is that? 94, 2004, 2014. So, right. So almost at 30 years, 27 years, right? Or whatever the number is. I can't do the math that fast. But the point is, if that was at a 10% rate, you're over 21 years, right? So that's 3 doubles. If you're at a 15%, which is about 5 years, you're at 4 doubles, right? If you're at 10%, that's 3 doubles, 10%, 4 doubles at 15%. And if you're at, 20% or more, it's about every 3 years, right? So you're at probably 10 doubles. This makes a significant amount of when you have time and compound interest both working in your favor. This make a huge difference in terms of the value of your money growing. So I just call that the power of large numbers, because if you take this thing and it keeps going down, look at your doubles in your last few years. So from 16, it took you to go from $10,000 to $160,000. Just look at the last 2 doubles. You take 160 to 320 to 640. So once each double, it makes so much more difference because you're operating on a larger number at that point. And again, if you just start with $1,000, so again, it's 10%, so 7. So it's, what is it? Let me get the math here right. So it's 1. All right, so you got 9 doubles, right? So if you take that times each, so you say, what is that? G1. I'll fix this up. I'm not gonna bore you all with going through it, but I'll get it together to show you to where you can just estimate, and you can put the number of years in here. And I have it on another spreadsheet. I just can't seem to find it. But you put the number of years in, the percentage rate, and you can just start playing, around with numbers. And then I think on one of my other ones, you can just say, hey, if I save a certain amount of money each month and I let that grow, and take 12 months of that, apply interest rate to it, and then look at that interest rate being applied over the number of years, you can see what these doubles do for you based upon the number that you go in with. This makes a huge difference, guys, a huge difference. So you want to be invested, have some money that you got set aside for the long term that can grow over time. and if it's in a, so S&P is basically it tracks the S&P 500. There are index funds you can get in. So like for instance, there's VOO. It's a Vanguard index fund you can buy. It's going to track the market. So whatever. So if you had bought this, back in '94, you would have earned that I think it was 1,600% or 1,300%, whatever that was, right? And that was just straight line. That wasn't even a cumulative or compounding. And you put that to work, it's going to grow. And so you want to be regularly invested, adding to it, and using time and compound interest in your favor. And it works. It works. So I know that was probably a rant and a tangent. Sorry. But I think it was just, important to kind of point that out to show, how this compounding interest and when you have gains that you can see and, going back to that NVIDIA, when you can see that, hey, in a literally in a few weeks time, just a bit bigger. In a few weeks time, you can see that this stock has just gone crazy. So this is, we're just talking from May, right? So not a few weeks, but in this case, 6 months. 6 months, this thing is up 66%, right? So you catch a flyer like this one time, you kill it, and then you're gonna have some years, some months that it doesn't do well. But you add that 60, you take a 63%. Think about how that's gonna get you to the next double that much faster on a 63% move in your portfolio for a year. And then, so let's just say you started with $1,000, you got a 63%, 67% move. The end of that year, your portfolio is worth $1,600. Then the next year, you start at zero January 1st. I mean, at $1,600 January 1st, and then December 31st of that year, let's say you gain 10%. So that's another $160, based on that 1,600, right? And so that's the second compounding, annual compounding over that. And then you go into that third year. Now you take that, that 1,600, and then you start at zero there. And if you get another 10% on that, it's another $160. So it just keeps compounding and adding on. So, that's, you want to have those working in your favor. So, let's see if I got any. Walt say appreciate the tangent. Yes, sir. Sorry about that. I just really thought that was important to show how this, because the thing is, at the end of the day, these are just tools that you're using to try to increase your wealth. Whatever your vocation is, whatever you're trained in, what you do every day as your occupation, you do it to, for a career, what have you, but there's also a component that you do it to earn money. And if you can get your money working for you, in addition to you, using your mind and your body working for you to earn money, might as well put your money to work, as much as you put your, your body and your skills and your talent to work as well. And these compound interest things, they really help, to help with that. So I'll get off of that. Hopefully that was, helpful in some kind of way. So last thing, any other questions? We're right at about an hour and a half. Any other questions before we jump off? Any stock questions, finance questions, anything? Nothing is off limits. Did I bore everybody with that? Was that too much?
No.
Did it make sense, or was it too scatterbrained?
Yeah, I think I appreciate it. Being able to visually see it, I think, helps a lot. So if and when you can get those formulas done, I'd be interested to see it, or even the formula for compound interest to see it. Like visually be able to see it, it helps a lot for me. So
Yeah, I have it in one of these sheets. I just hate that I can't put my hand on it, but I will get it. It's one of my crypto sheets. And then let me see. I just can't seem to find it. But when I do, I'll here. I think this is it here. The double up. Yeah. So what it allows me to do is, it's kind of what I was trying to illustrate. So I can say the percentage of interest that I want to earn, right? The initial capital, and then the numbers here just really represents the years, right? So 1, 2, 3, 4 along the side is the years. So I can say if I start with 10% interest rate, start at $1,000. So after my first year, it's $1,100. Second year, 12, right? So it's kind of thing that we were just talking about. So let's bump these numbers up a bit to what we use. I think we're using 10,000, right? So kind of on that other chart. So you take this 10,000, right? So after the first year on a 10%, 10% is of $1,100. I'm sorry, of $10,000. A 10% is $1,000. So you add that $1,000 to that to that 10. So that gets 11. So that's year 1, year 2, year 3, year 4, year 5, year 6, year 7, year 8, year 9, year 10, right? So we know rule of 72 says 72 divided by 10 is going to take about 7 years. So you can see here, right at 7 years is 7.2 years. So almost at the end of that 7 year, that's your first double, right? Because it's at 7 years on what the formula tells us. If you jump that up to 15%, that goes to about, let's just see where we get to the double. You get to the double at a little bit less than 5, right? So that's the first double. So you say 5, 10. So you can say first double, second double, third double, fourth double, fifth double, right? Fifth double, 25, the fifth double on that, right? So the first double occurred at about 5 years. So you're talking 25 years. You take $10,000, earning 15% per year. Now, this is hard to do. I'm not saying that this is easy, but it gives you a benchmark, right? If you can average 15%, and every year is not gonna be that. So, but let's just say that average something close to that. You take $10,000 in 25 years and turn it into $329,000. It's just what it is, right? And to see this, it kind of helps, and it gives you something to shoot for. So when you see certain stocks that you're in and they're doing well, and you can track the percentage, what you should do is on your portfolio at the beginning of the year, January 1, write down what your portfolio value is, and then January 31st, write down what your portfolio value is, and then just subtract out if you made any contributions to it, subtract the contributions out, and then just do the math. How much more it is versus where you started, removing the contributions out, and then whatever that number is, just doing the minus, and then you put it over what you started with, divided by what you started with. That'll give you the percentage gain, and then you can come back here and you can say, okay, based upon that percentage gain, here I can say, let's just say that was 8%, right? Let's just say you had a $50,000 portfolio, right? You started the year at 50, right? You ended the year at 54, right? So you can say, oh, okay, that's about an 8% gain, so you can back into what your percentage is, and you say, hey, if I can duplicate that, then you just plug the numbers in. And you say, okay, so 8%, so 50 to get to 100, it's going to take me a little bit more than 9 years, a little bit less than 10 years. So say 9.5, right? So you say every nine years. So you go 9, go 18, 18, what's the next after 18? What's 24, right? So in 24 years, if you averaged 8% on a $50,000 investment, you'd be at $317,000. Somebody's about to say something. I'm sorry. I thought I heard somebody.
Yeah, I was saying that it should be 27 if we're doing every 9 years.
Oh, okay. Sorry.
27.
Yep. Thanks. But yeah, I'm bad on the math. So again, 27, you're almost at 400, right? Yeah. So 360. Yeah. Right. Can't do math that fast as a talk, but you get the point. I'll share this. Let me make sure. Yeah. Let me save this out. I'll create another spreadsheet, and I'll get this, and I'll put this link in the chat. Now this is a a Google Sheet. And with the Google Sheet, what you can do is, I'll just call it the rule of 72. And I'll put it in the link. When you go into Google Sheets, what you can do is, it's not what I want. What you can do is make a copy of it, and I'll show you how to do that. All right. So as you go in here and you pull it up, go to make a copy, and then it will save it into your, if all Gmail users, if you save and make a copy, it'll save it for you. And then when you go to your sheets, you can always pull it up and you can play with it. I'll color these for you so you know where you can put your inputs. I'll just make them green. Didn't want to do that. Let me do it the other way. Make it green. So green just says this is where you can enter the values you can enter it in, and then it'll calculate everything else. I'm trying to think, what did I have these for? I think these were just if I were saving per month, how much that savings would be on a monthly basis. Let me see. Say for like $10 a month. I think it changes. Let's see what that is. I don't remember what that is. Savings per month. I forget what these columns is. I have to go through and see what these other columns are. But for the sake of what we're talking about, is these first two columns that you want to concentrate on, and it'll help you to see that. So let me put the link in here. Make sure I share it so everybody can see it. Change anyone with the link. Okay, copy the link. Okay. So it should be open for everyone. I'm gonna stick it in the chat. So somebody can click on it and let me know if they have access to it. If it comes up and it doesn't have access, if you see a thing to say request access, go ahead and click on it, and then I can make sure I share it such that you all can get to it. And then just start to play around with what your personal financial situation look like what you're starting with, and don't be, and what I would say, even for if you have a small account, you're just getting started, it doesn't matter with where you start. This compound interest piece. So if you just say, hey, all I have, is an extra $1,000 that I can put into something, and just look at, hey, if I can earn 8% a year, or if I can earn, 10% a year, right? So if you take 10%, when it gets, you take that number when it gets to a double, so it's about 8 years. So you say 8, 16, 24, right? So if you go down here to the 24th, and if you need to extend this, what you can do is just move that to the right, grab the end of this and just pull it down, and it should just copy. Yeah. So that's another thing. Well, I just did it. So if you created a copy after I just did that, it'll update. And so just play with this. I would tell anybody, it's not about how much money you make, it's about what you keep and what you have working on your behalf. Because again, you can see here at a 10% interest rate, let's just go 35 years, that $1,000, if you can earn 10% a year in 35 years, would be worth $28,000. That's significant. And so you don't have to start with a lot of money. If you don't have to, don't believe that you have to. You can start with a small amount, and you can get there. So you don't have to have a lot of money. You just got to be consistent and just work it, and it'll work for you. Oh, okay. And what this is that let's see 500. C3. Why is my C3 not changing? I'm gonna have to look up what these other columns. I've done this so long ago, I really don't remember what this is. Oh, okay. Here, I think this is it. Let's see. Oh, okay, yeah. So in each one of these, if I save this amount a month, this will tell me if I want to save $200, how much it would be to save per month. If I want to save $200 in a year, it'll tell me that I need to save $1,600. $16.67 a month. So that's what that is. So you can, whatever your savings goals are, you can put the savings amount in here. I'll change these to another color, and then the row above lets you know how much you need to save per month to meet that. So if I wanted to save, say I want to save $500, say I want to save $5,000, right? I need to save, $416, to get there. So that's what these rows here mean. What you want to save, and then it tell you per month what it would take to get there. Sorry, it just took me a minute to figure out what the heck that was because I didn't remember. All right, so that's it. Went on too long today, but hopefully this stuff is helpful. Use this. Slow and steady wins the race. You just need time and consistency in your favor. And if you do, it's just math, people. It's just math. It works. But let me say this. I'll say I was through, but when you pay interest rates on credit cards or other stuff, this works against you. So where you have you bought something for $500, you have a 10% APR. If you don't pay that thing off in 5 years and you just let it keep accumulating, this is what the banks make off of you when you're carrying, interest over time. So you become their rule of 72 investment when you're borrowing. So, just keep this in mind. This works against you. So this is how, big money is made. That's why our whole system is built upon credit and loans, because they know what the math is. And if you're not aware of the math, they use the math against you. So, all right, I'm finished with that. Thanks everybody for joining.